All right then, good afternoon, everyone. As we are at the end of another week of trading on Friday, the 28th of June, we'll have a flick across the calendar. A relatively difficult week this week. I mean, not too much really for us to talk about. Pretty choppy moves across the board, and the kind of chop continues in the summer months. But we'll have a look at some charts now in a minute. Inflation out of Canada caused a bit of strength in the Canadian dollar. Probably make the Bank of Canada backtrack a little bit, or think about backtracking a little bit about a cut at their next meeting. I mean, you got a consensus of 2.6, still below 3%, so still within their 1 to 3% target band, but beating consensus by 0.3, popping up to 2.9% is certainly not what the Bank of Canada will want to see. Core CPI, ticking higher, but still pretty okay at 1.8%. But now this is 0.6, 0.5 the previous, 0.6 the month before that. That's what, 1.7% inflation over 3 months. That is certainly not a situation where I want to cut interest rates. So that is a pretty tricky one when it comes to the Bank of Canada. Personally, just judging off of that, I don't think they can't really go and cut interest rates into that, can they? I mean, you look at 0.6 in March, 0.5 in April, 0.6 in May, plus then 0.3 in February. I mean, still too high for the still too high for the central bank to want to go and cut interest rates. They'll probably want something more like kind of 0.2 relatively consistently, but that's not what they're getting at the moment. Inflation's still too high in Canada. It's an interesting one over the last couple of months. We were kind of wondering, would it follow into Friday, because we had the monthly CPI indicator from Australia. It kind of brings hikes onto the table for Australia. I mean, they've talked in the last couple of meetings about considering interest rate hikes. This will make them consider it even further. Previous 3.6, consensus 3.8, actual 4%. Now you've got inflation rising in Canada, inflation rising in Australia. Looking at the US today, then maybe they decide to go and follow suit, but not quite. 0.1% core PCE today, which is the Fed's preferred metric. You did have a bit of an uptick in the previous month, so that was upwardly revised from 0.3 or 0.2 up to 0.3, should I say, and then that has come in 0.1. So pretty good from the Fed. The Fed will be relatively happy with that, as that is what they track for inflation. So yeah, Canada and Australia, probably got to look at those currencies for some long opportunities going forward. More so Australia than Canada, but again, both of them long opportunities probably to come into next week. You would have to imagine, but chop pretty much continues. You look at your Aussie, a Kiwi, a little bit downside this week, but your Aussie, euro, sterling, but all over the place. Dollar Swiss was down to start the week, then what should I say? It's been up this week, so I forgot it was on a 4-hour chart. Dollar Swiss has been trending higher this week. You did have that interest rate cut from the Swiss National Bank last week. That has continued to have a bit of follow through. So Dollar Swiss trending higher, dollar yen trending higher, up above 160. Dipped its head above, put its head above 161 in the overnight session this morning. Japanese officials continuing to job on the currency, continuing to try to prop up the strength of it. That has proved pretty pointless up until now. So we'll be looking for some sort of comments. We'll be looking for some sort of comments from Japan, from the Bank of Japan, looking for rates in which they can buy and sell for a next step towards intervention, which I have to imagine probably comes at some point, potentially next week. But dollar CAD, but all over the place. A little bit of a tricky one when it comes to the currencies. Comes to the currencies at this moment in time. Stock indexes still a bit choppy. I did have a bit of upside in yesterday's trade, but before that, just dreadful week of trading really on the US side of things. You can see the S&P, the Dow Jones, the Nasdaq, but all over the place. The Russell's been gaining over the last 24 hours, but all slightly gained over the last 24 hours. DAX all over the place, Euro stocks all over the place. The FTSE, yeah, it's difficult trade. This uptick in bond yields not driven by anything really. Not them popped higher. Bond yields are then pushed back lower after PCE, 2-year yield getting whacked, 10-year yield getting whacked, and that is obviously to do with inflation. being at 0.1%, no need for the Fed to kind of talk hawkish with that. Kind of brings forward the prospect of interest rate cuts, which I think markets are gunning for a bit at this moment in time. So not too much really to talk about over the course of this week. Trading's been somewhat tricky over the last kind of 7 days. So obviously not 7 days, over the last 5 days, but what do you do then going forward? That's a little bit tricky, a little bit of a tricky one. You're still probably going to have to look to buy stock indexes, obviously due to the fact that interest rates are coming. When they come, we don't know yet, but inflation at 0.1 is exactly what the Fed will want to see. Into next week, got the general election in the UK the next week. The other thing to do with elections, we had Trump and Biden out last night. I imagine Trump got the better of Biden. If you watched any of that, it's helped to watch it, obviously. But I'm seeing a bunch of clips over the course of today. I read a couple of reports on it, and big jump in favoritism towards Donald Trump over the course of last night. I think all Donald Trump really has to do is just let Joe Biden talk, and he'd probably win it. If Donald Trump just keeps his mouth shut in these things, I think he'll get the upper hand, just simply due to the fact that Joe Biden, good portion of the time, can't actually string a sentence together. So not the type of guy that, no, not the type of situation, obviously kind of feel from, but not really a situation where he's going to gather much troops to vote for him if he struggles to string a sentence together at times. So that probably likely to be positive for stock indexes. Obviously, Donald Trump was good for business the last time. I don't see why it would be any different this time. Then you got the UK next week. We'll cover that when we get to it. But for now, relatively tricky week. Hopefully, there's more opportunities for us into next week. But I'll let you get on with your weekend. Have a good weekend, everyone, and I'll speak to you on Monday for a